Hello guys, welcome back to another Lumley trading video. In this one we're going to be looking at Bright Green Corporation, which is ticker BGXX. Now is the leading gapper today being up, one of the leading gappers being up 106% as we're recording this video. So what are we looking at going forward? So if we pop over to how we do all our technical analysis on this channel, and that's using the standard deviation channels indicator. On the left we have a 6 month, on the right we have a 1 year. Now, firstly to know, obviously this stock moved a lot when it IPO'd, crazy movement, and this has made the deviations very wide. And we can see all this happened at the beginning and then basically fell down to around $3 and never really pushed above it since, apart from this 1 day here where we had a quick spike. So what this is kind of showing is obviously deviations are very wide. It's going to be hard for them to hit these levels because the first kind of 10 days of data really disrupts kind of the overall deviations. So if these levels hit, they're still going to be very strong and really all I'd be paying attention to. But again, it wouldn't be unlikely for them not to hit, just considering kind of how far they are compared to recent price action. So that's the only problem with looking at a stock like this. Again, for someone like me, this is where a trading edge is. So I would much rather just find another trading opportunity than force a trade. If it pushes out to these levels, then great, I'll look for a potential trade. But otherwise, I would just be looking at a different stock to trade instead of trying to force something closer than it is. But looking at that, we can see our first deviation on the 6 months, so our closest deviation is at $2.60. So really from where we are now, still requires the stock to push up around another 80-90%. So again, a big move from where we are now. So really, if we see a second day of strong momentum, then potentially we can get there. But again, like we said, it might not even happen soon, just considering how far and wide these deviations are. But again, it's better to be prepared than not to be. So these would be our two levels. We have 267 and 306. These are quite close. You could be using them as ranges, but considering again that it stops so low valued, that difference is still 15%, so it's still quite a wide stop. So obviously if you're doing it, I don't think there's options on this. If it's for an options trade, that's kind of a big enough range, that's fine. Oh, there is options. So that's one way you could be potentially looking to trade them, because using then a wider range is a lot easier to manage. But if you're buying or shorting the individual shares, and obviously a range of 15% on the stop is going to be quite wide and probably not feasible. But those would be the two levels I'm paying attention to. If we did break that, again, this will really require an extreme move just because it's so far out. But that would be 660, 750, and kind of final levels taking us out to around $10.50 and $12. Again, I wouldn't be paying too much attention to those. All I'd really be paying attention is these first two deviations, so 270, 310. And again, the way I look to trade these is going to be the same as all the analysis videos we do. The first time we hit a level, what I'm looking to do is basically just play the reversal. First time it hits, looking to play the pullback. If it then comes back to, and then obviously as it pulls back, moving my stop to break even, locking in some profits. Really, I'm ideally looking to play the entire pullback if it happens. But again, it's always hard to predict really the exact reversal, so that's why we like to be in, and we can take that as more as kind of a short term or scalp trade, depending if it's a day trade or a swing trade, depending how we're trading it. So that can turn that kind of into it, but if the trade continues to work, it can potentially be a swing into what we look to play the entire reversal. But either way, we get short here, lock in a tiny bit of profit, move our stop to break even. If it ends up coming back to retrace back to this level, then again, that's going to be a stop out. Wait for it to break through, and then really what I'm paying attention to is to break through the level, come back to test it as a support, and if it holds, then I'm looking at more of it long bias, and that would be to that next deviation at around 665. But again, because these deviations are so wide, I probably won't be looking to hold for that entire movement. If I'm holding through options, then that's fair enough. There's a way to manage it. But holding outright shares, probably just not something I would ever be looking to do. Probably, again, but just be looking for day trading off these levels. And that's all I would really be paying attention to. Now, quickly to flip to the support side, we can see it's going to be hard to find supports because our statistical mean on both the 6 month and the 1 year is around $1.30 to $1.40. And obviously we cannot trade a stock into a negative, so they're not actually valid supports. So really all I can see paying attention to as support levels will be obviously that 52-week low, the gap fill location at 50 cents, and then it's just going to be the key psychological levels, which is really nice because here it does line up. So if on BGXX it does come back to this level, definitely a potential long, because not only is it a gap fill, it's also a big psychological level. If we break the 35, then obviously 25 cents is going to be that next big psychological level. Lower than that, probably not something I'm looking to touch until there is a reason to be trading it. Anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe and check out this analysis video.